We think that essentially this cycle is very different from two perspectives. One is that the US is taking a policy rate hike at a pace that is not going to dent on the US growth in a big way. Remember that, right now unemployment rate is relatively low, whereas in 2013, when Fed took up tapering, unemployment rate was much higher. So the Fed is taking up policy tightening at a time when the economy can absorb it. And so what that resulting is in stronger growth and better exports for Asia. US current account deficit is continuing to widen. So that creates an external backdrop for Asia, which is much more manageable. The other variable that we're looking at is the US 10-year real interest rates. Those have risen, but we're still at minus 43 basis points overnight. And so this is very different dynamic as far as the US 10-year real rates are in terms of the pace at which it is rising and the magnitude by which it is rising compared to 2013. And more importantly, sorry, go ahead.
No, finish your thought.
No, so more importantly, from Asia's perspective, we don't have inflation pressures. Look, I mean, US, rest of the world, even emerging markets in CEMEA and LATAM are seeing inflation challenge. But Asia does not have that big inflation problem. And so that's allowing Asian central banks to take up policy rate normalization at their own pace, which is warranted by our growth and inflation dynamic.
Why do we not have inflation in Asia? I mean, we've been talking all day about commodity price rises. We've heard a lot of companies reporting that their input prices are going up quite sharply.
Now, when you compare with the US, I think there is one major difference that is there between US and Asia, and that is in the labor market dynamics. So Asia did not see much labor market disruptions. That has meant that the supply chain and the domestic manufacturing production has also been less disturbed. And that's reflected in wage growth numbers. If you look at in Asia, that's very well behaved. It's still pretty much in line with where we were before COVID. And so that's one major factor that is different. The other factor which is different is that the fiscal policies were very modest in terms of expansion. They were not as aggressive as you've seen in DMs. And that's resulted into an environment which is not inflating demand at a very rapid pace like you are seeing in the US, especially the consumption growth variable.